our homework problem, chapter 10, 1A, which is in our homework 1. Let me get to our screen here. Okay, the problem 10.1a is a 3-part problem, and it gives us some information about some liability accounts and then a listing of some transactions. And the first part of our homework, we're needing to journalize these January transactions here. And so on the first one, on January 1st, we borrowed $18,000 in cash from Apex Bank on a 4-month, 5% $18,000 note. So of course we put the date in, and we are debiting cash and crediting notes payable in the amount of the note, $18,000. January 5th, we sold merchandise for cash totaling $5,724, which includes a 6% sales tax. So of course, when we're journalizing that, we choose January 5th. We're debiting cash. We are taking in sales revenue, and we are also taking in sales tax payable. Because the amount includes the 6% sales tax, in order to back out the amount of sales tax payable, we would divide 5,724 by 1.06, which is 100% plus the 6% sales tax here. And we would get $324 was the amount of sales tax. And so we would credit sales tax payable $324. Our sales revenue then is $5,400. And of course, we debited our cash $5,724. Moving on. On January 12th, we performed services for customers who had made advance payments of $10,400. So obviously, we are offsetting our unearned service revenue. And so on January 12th, we would debit then our credit account of unearned service revenue in the amount of $10,400, and then credit service revenue, as this is now revenue been realized, $10,400. Our next transaction is on the 14th. We paid State Treasurer's Department for sales tax collected in December of 2016 of $6,850. So on January 14th, we would debit our sales tax payable, and then we would credit cash because we were actually paying this amount out to whoever, the collection authority. Our last transaction here is we sold 550 units of a new product on credit at $45 per unit plus 6% sales tax. So we would debit accounts receivable, credit sales revenue, and credit sales tax payable. Now the $45 times 550 is the 2,400 and 750 that we get here. So if we want to multiply that by the 6%, that's where we get the 1,485. And together, because this was purchased on credit, that total becomes our accounts receivable, because we do need to collect not only the sales amount, but the tax as well. Okay, so that's how we journalize those entries. Now, moving on, the next part is we're going to journalize the adjusting entries at January 31st for the outstanding note payable and for the salaries and wage expense in relation to the expense and payroll taxes. So we have here in our problem, during January, the company's employees earned wages of $73,000. Withholdings related to these wages were $5,585 for FICA, $5,214 for federal, and $1,564 for state income tax. And the company owed no money related to these earnings for federal or state unemployment. And we are to assume that wages earned during January will be paid during February, and no entry had been recorded for wages and payroll tax expense as of January 31st. So going back down here, our first entry, we're wanting to record the interest on the outstanding note payable. And so when we go back up to here, January 1st, we had $18,000 note payable. It's a 4-month at 5%. So to calculate the interest for that month, because we're our adjusting entry is for January 31st, we would take the $18,000 in cash, and we would multiply that by 5% times 1 over 12. And that would bring us to this $75. And then we would debit our interest expense and credit our interest payable. The next would be the entries with regard to the salaries and wages expense. The amount of salary, and I'm sorry, I'm going back up here, the 73,000. So we would debit our salaries and wage expense for the entire amount, and then plug in each amount for the taxes that were listed in the problem up here for FICA, federal, and state. And then the difference between the salaries and wage expense and then these taxes payable would then be the amount that we would plug in here as a credit on our salary and wages payable. And then moving on, we want to record the payroll, the employer's payroll taxes. And up here, we've recorded the employee's portion of the payroll tax. Down here, we would debit payroll tax expense for the same amount for the employer's contribution. And then also credit FICA taxes payable. Moving on, we will finally then prepare the current liabilities section of the balance sheet as at January 31st and assume no changes in accounts payable. So we would start by putting in our date because it's always as of a date. Put in here current liabilities, and then we start with notes payable, plug in accounts payable, and then salary and wages payable, and then FICA taxes payable, unearned service revenue, federal income taxes payable, sales taxes payable, state income taxes payable, interest, and then interest payable. Now, on some of these problems, I know that it really matters what order we've put these problems in, and you may get it wrong if you don't have the problems in order. But typically, I like to start with, have the notes payable first, then accounts payable, then salaries and wages payable, and then I typically like to have my the remainder of them go in a descending order according to amounts. Whether that's the exact way to do it or not, that's what works for me. Anyway, we would plug in the numbers then of the notes payable. We had that $18,000 note payable, and then of course accounts payable up here at the beginning. The problem stated that we had $43,000 in accounts payable, and we had $19,500 in unearned service revenue, and then $6,850 in sales tax payable. In putting these, so we would pull down the $43,000 into the accounts payable. The salary and wages payable we would take from our adjusting entry here, and then the FICA taxes payable we would pull from our adjusted entries here. We had the employee contribution plus the employer contribution, and that's the total amount that we would put here in the FICA taxes payable. And then we would plug in the remainder as far as unearned service revenue. We had started with 19,500, and because we had then realized the revenue of 10,400, we would subtract that from our unearned service revenue, and then that becomes our new balance in the unearned service revenue of 9,100. And then we would plug in the adjusting entries for federal sales tax or state income tax, and then the interest payable that we calculated. And then we would come up with our total current, this whole column together. Hope this tutorial helps you. If you have any questions, please leave those in the comments. Thank you.